Hey, good afternoon, everybody. Market just closed up, so we're going to go ahead and take a look at what happened today. Here on this daily, we really just expect the continued bullishness. So we finally did break through all-time highs. We closed above. We spoke about how if we were going to close above, we would expect another leg, and we're not going to try to start calling tops, right? So we just want to look at the most recent discount as we break that high. That's this daily fair value gap. We trade down into that here Monday. Tuesday holds, and now Wednesday we've actually expanded and we've gotten back above the old high. So I would look for this daily high to be the next draw going forward. Go down to lower time frames. Here's that daily fair value gap again, now on that lower time frame. So we said once we create that, we expand away. Notice what else we have here. Bullish breaker, right? We have the low up to the high, lower low. We then displace through that. So as we retrace into this, wicks are doing the damage slower into more like the hourly fair value gap here. But you notice that the bodies are all being held within the daily fair value gap. So eventually we end up running, right? We had created this gap earlier in the week, but we end up running, falling just short of these highs. Or excuse me, just taking that high. You'll see on the lower time frame, just barely. That's what we did this morning. But we barely wicked that high. We then retrace. And we'll still look for another run to clear those now relative equal highs. So buy side once again. 15-minute, kind of same idea, right? Just a lot of back and forth in here. We understand that we're consolidating, where we have our bullish order block as we trade down into its lower quadrant, the mean threshold, revisiting the fair value gap as well. We then break above that, creating our breaker. From there, as we say, a lot of consolidation. Eventually, we're able to release, get the retracement just back down into the inefficiencies, into the original range. And now we're starting to slowly grind our way back up for the SPY side. So in a 1 minute sense, if I bring these up real quick, as we opened at 9:30, we said that we had these higher objectives. So this is that 1 hour swing point we just spoke about. That was kind of the ultimate goal, right? The actual swing high. We have another hourly fair value gap in here that you'll see as well, or excuse me, an hourly high. That's what this high is. So that became important for this little price action. But the main goal was the actual swing point. At 9:30, we opened up all one-sided delivery, right? So just straight bullishness, respecting all the discounts, closing above, leaving a first presented, closing above the first presented from the week, continuing to be bullish, holding volume imbalances. We said that if we're going to break above this, we would expect that to hold price. Eventually, though, we left it open and we actually delivered into the buy side first. So at this point, after clearing the buy side, 9:30 was all one-sided delivery. This becomes that morning Judas swing. And from there, price now started targeting sell side. Eventually, we spoke about how midpoint of the opening range gap will tend to get traded into. And we had a lot of relative equal lows that got targeted as well. Like this. Right, do we get these lows? We got these equal lows here. So there's a lot of sell side was picked up now on this move down. Right in here, a lot of opportunities to engage with this. First, you could use the wick that we speak of. So if you trade above that wick, we would expect something like this to hold price. As we close below it, inverting it now, that becomes an area for entry. Say you don't trust that, you want to wait for more confirmation. As we now break below this bullish fair value gap, this was also an hourly high. If we're going to break below that, especially after we hold it for the first time, that can now become another area. So eventually we did wick up back into the wick here, but for the most part, the actual fair value gap would have been fine. Right, finally, as we do leave it, so after clearing a short-term high with this wick, we're able to leave this fair value gap here with this candle. We then get the retracement into it, and from there, we get the break lower. One last tap, perfect delivery there, and then we got the huge run lower from here. So at this point, just starting to fall. As we said on the way up, we really didn't create any sell side. It was all one-sided. So price falls through this pretty easily, reaching right for the first swing low we could find, which is here. So we attacked the sell side. At this point, we were starting to look for shorts. Right, the expectation was that we would come for these relative equal lows here and here. So as we create this little short-term low, price retraces, we were going to try to use this bearish fair value gap. This for now. Unfortunately, it just holds the high of the opening range, breaks lower, At this point, we said that the volume imbalances in here would be a good opportunity to enter. So we just use this. Understanding now that if we're going to be in bearish delivery, right, bearish order flow, up close candles like this will hold price. We're probably going to leave this as a breakaway gap. So we just use the volume imbalance. Stop above the candle here, and then we target this swing low. Could have been this swing low. We just went for the low hanging fruit, which was this swing low here. As we trade up into it, eventually we leave, bounce one more time from this area. Right, remember this is our, so this is that old buy side pull. So eventually, right, this is that old daily swing point here. So this is going to be a pretty key level, just a daily swing. We consolidate within the volume imbalance. We hold the up close candle. We then leave, breaking back below that previous old high. Notice we left that bearish fair value gap. That's kind of where we were adding when we were speaking about it this morning. From there, we trade lower. We attack the first sell side. We give a retracement just back up into this fair, or into the original wick. So as we create the wick, we break through it. We leave the volume imbalance. We retrace up into that. That holds price perfectly. Don't forget we had our 830 level here as well. Right, so 830 is a pretty key level. Price trades up into it. From there it holds and delivers that final run into the equal lows. At that point, it bounces off of, once again, the first presented. So not only is it seeking sell side, it's returning into a first presented fair value gap. From there it rips. We trade higher back into previous day's high. And now at this point, we just start consolidating. Right, even though we are choppy, we understand that first presented here ends up holding price. Right, this is paired with the bullish breaker, midpoint of the opening range. If price doesn't want to break lower and wants to hold, right, especially holding at that lower quadrant of the opening range, once we get back above its midpoint, that should be an area that supports price. So eventually we do wick below, as we say, just trading into the first presented. But for the most part, the opening range and midpoint holds us. Right, as we do this, we then accelerate. We're getting back above previous day's high, just being stuck in that consolidation. Right, we did actually try. So the only two entries for us today, we'll show real quick. So we were going to try to just capture a run on this buy side. We had a pretty tight little entry. We were just going to use the volume imbalance, stop loss below to target the high. Eventually, price trades into it. Right, spend some time. Let's hide this. So spend some time within here. We wanted to see price accelerate and rip for that. Instead, it runs out our stop first, trading down into the first presented as we spoke about, holding and then delivering perfectly into where we kind of expected. So just a scenario of entering a little too early, right? In a choppy market like this, that's kind of when it's a little more dangerous, or obviously less probable, a lot of retracements. And as you see, it just continued to reach for that first presented. Eventually, we're able to kind of leave. We get above previous day's high, as we said. From this point, we're moving higher. We actually close above the opening range. You'll notice that we're closing above the opening range. We're finding support here. We're actually running against today's first presented, but then we actually displace and leave today's first presented with a volume imbalance. So that became our second entry. Right, this played out nicely, making back what we lost and more from this morning. So at this point, right, as we said, we're just continually grinding higher. So all of this in here is balanced. Right, obviously you could see that paintbrush analogy. From the slow up, just back, forth, nonstop, right? We could do this all the way. So when we finally leave the opening range, trade back down into it, find support. And now once again, right, this run here, let's clear this up. So you guys saw all that's balanced. As we trade up into today's first presented, it holds the candle bodies. They then run lower to pick up a short-term low. So now within this area that we already expect bullishness, we're getting our YouTube model, that framework that we spoke of. We clear the short-term low. We displace through a high. That in itself would be valid for entry. Say you had no idea about the first presented for today, right? That would be valid. But now that we understand kind of the whole narrative, what's already taken place, we know that today's first presented now will hold price. So easy entry, just like this. Right, so we're entering around the low. We low tick that. As we're trading up higher, we're just going to aim for this now, fair value gaps, consequent encouragement. And that's where that exit is. So we catch the swing low up into the swing high. Right, eventually given just one more little run on this low. So another opportunity to enter. From there, we break higher. We then hold the volume imbalance. We break through the weekly first presented. Right, we're leaving a fair value gap within that, aligned with its midpoint. That becomes a new area of interest to hold for bullish delivery. Right, we have this level up here that we're speaking about. That's our standard deviation. Perfect delivery up there. But if the expectation is that we're going to now continue bullish, we would expect, right, this first presented its midpoint to hold, especially as we close above it here. So we're not worried when we see this retracement. Right, we understand that we have this entry here. We're just going to hold it until we can get the midpoint of that 1 minute. We create these little relative equal highs. That just confirms our bias even more. Right, so as we're seeing price retrace, we're not worried. We understand it created these equal highs to then run as it runs into the midpoint. And if anything, as we want to run higher, it's just engineering more buy side. So eventually it does give a little wick, holds the body, runs into the equal highs, hits the midpoint when we get out. From there, as we head into 350, gets a little bit choppy, just holding that fair value gap. But eventually we hold the first presented. We then accelerate, as we said, into that standard deviation. And now from here, right, that's also the original fair value gap we spoke about this morning. So from here, just consolidating. I would expect to see buy side cleared, as we said, right? Just continued bullish delivery. This is kind of ugly in the sense that a lot of lows that could easily be ran here. So we may need to actually pick up some of this. If not though, like if we just accelerate through this high, all of this will be balanced and we may not even need to come back in here. So if we come back tomorrow and price is right, as we say, closed above this aggressively, we'll just look for price to keep running without any retracement. But if we wanted to, right, if we could pick up sell side before heading into tomorrow, that'd be even better for continued bullishness. So either way, we expect higher prices. It's just a matter if we're going to retrace first or if we're just going to blast straight up and continue to push. Yeah, hope you guys found that helpful. Glad to be back. We'll talk again tomorrow, 9:25. So until then, have a good night. Talk later.